Hello and welcome back to our quarterly Hedera State of the Ecosystem, and we're here today for Q2. So today I'm excited to be joined by Gregg Bell, Senior Vice President of Business Development, Financial Markets from the HBAR Foundation, and Joseph Bergvinson, co-founder at SaucerSwap for second edition of our State of Hedera quarterly calls. So we'll assume that our audience has baseline awareness of where the Hedera blockchain is at, their key differentiators. If you need any kind of catch-up of replay, please feel free to go back to our previous quarterly webinar or reach out to Gregg to learn more. Today, for today's call, we'll focus more on DeFi on Hedera, how DeFi, the DeFi ecosystem has developed, and where it's headed. So as a reminder, before we get started, none of this webinar, none of the information contained is investment advice or financial advice. So please only treat it for informational purposes only. And with that, let's get started. So let's go ahead. Let's start directly with DeFi on Hedera. So Gregg, could you start by giving us an overview of the DeFi ecosystem on Hedera? What makes Hedera an ideal platform for DeFi projects in your mind?
Well, thanks for having me to begin. And DeFi is really fun. It's fascinating. It has both individual and institutional interests. And I'm really excited to be here with Joseph with his DEX experience. I know later on we'll touch on some of the institutional side where products from some of the world's largest asset managers are being tokenized. But I think really it's helpful to start with the question of understanding why. Why Hedera? Why DeFi? As I'm sure your users and viewers will recall, Hedera, powered by its cryptocurrency HBAR, has been independently verified as the most used open source public network in terms of total transaction count. So it's about 20x that of Ethereum. It's the fastest in terms of realized peak and average transactions per second at a low cost, which is really important for DeFi apps, in that, especially those that require high throughput and low fees. It's also quite developer friendly, with programmability in a variety of different languages from Java, JavaScript, C++, and Solidity. So usually it doesn't require a developer to learn a new programming language to enter the ecosystem. And I think what's great about on-chain data and systems like the TAI, of course, is that you don't have to take anybody's word for it. You can self-verify, which I think is the ethos of the community. And I know that our community of developers are really proud that Hedera has accomplished these performance metrics with 100% uptime over the last year. And so there are several other high-performance networks that have gone down under lower volumes, and so it's something that we're quite excited about. I believe that these features, coupled with the high scalability, fixed and low transaction fees, so 100th of a cent, 0.0001 in HBAR, with no surge pricing, is what really makes it an ideal destination for DeFi. And similarly, why I think we've seen adoption from some of the world's largest corporations, such as Google, IBM, Dell, LG, Hitachi, Boeing, and many more. Firms that probably care that they're building on the most environmentally friendly protocol. But industry-leading TPS, or transactions per second, that's really just a number. What does it mean? Speed means faster payments, better user experience. Verifiable transparency means trust. Global institutional-based governance leads to stability. So I'm really excited about what's being built on Hedera. I know that DeFi, in the DeFi space, we're only just scratching the surface.
And speaking of scratching the surface, today the HBAR Foundation has allocated over $408 million. That's more than scratching the surface, across 225 grants to fuel the development of Hedera's ecosystem, and with a particular focus on DeFi, right? So what has come out of this? What have been the key DeFi projects and initiatives funded through these grants?
Yeah. Well, Hedera offers this unique combination of advantages that really, I think, make it an ideal choice for developers and users and institutions alike. There's been recently a big push on EVM compatibility, or maybe better put, equivalence, meaning that a Solidity-written smart contract can do a lift and shift to deploy on Hedera. And what I think you see is just a level of performance that dwarfs that of other networks. And this means that DeFi applications built on Hedera can provide their users with near instant low-cost transactions, unlocking new possibilities for high-frequency trading, micropayments, and more. So, I think that a lot of people, when they think about DeFi, it's about an access point for a token or service that maybe they can't otherwise access in a centralized exchange or otherwise. And so the ecosystem offers wallets, decentralized exchanges, network bridges, on and off ramps, stable coins, and many more. So if you're looking to get involved with the token project, I think it really starts with wallet support and custody. If I buy or receive an asset, where can I store it? So there are a number of institutional custodial solutions like BitGo, for example, and then there are self-custodial B2B type wallets like the Blade wallet. But from an individual perspective, I would say that the self-custodial wallet that's most popular is called Hashpack. And Hashpack, the UI there makes it really easy to buy assets, to collect NFTs, connect dApps, and stake, as well as associate the wallet for token airdrops. And it can be done in just a couple of clicks. And that the app exists for both iOS and as well as Android. For those MetaMask users out there, as a browser extension, there is a Snap browser plugin for MetaMask. So if you're already holding your Ethereum-based assets there, I highly encourage you to go to the Hedera website at the MetaMask Snap. From a DEX perspective, there's SaucerSwap, of course, our number one DEX, and I know Joseph will be talking more about that. But there are others. There are other products like HSuite.finance, which has its own value proposition in terms of leveraging some of the native non-smart contract services for efficiencies, as well as Launchpad and DAO services. Let's see, from the liquid staking side, there's StraderLabs.com, which supports via smart contract the connection to Hashpack as well as Blade Wallet. It also has several liquidity pools with APYs as high as 34.5% the last I checked. And I think it's a great tool because you can also stake ETH, BNB, and Polygon there as well, so that you can have some of your liquid staking assets all in the same location. From a native bit bridge perspective, there's Hashport.network. It's the most popular network bridge that's connecting HBAR to over 10 other various chains and wrapped assets. I think to date, it's done about 50 million in terms of volume with embedded on and off ramps and USDC stablecoin support. And then there's the lending and borrowing perspective. And really those are made possible by a number of new oracles, which have come online over the last few months. Peeth, Supra, are two, and then we're really excited about Chainlink, which is one of our governing council members. And so I'd expect to see announcements from several new projects around borrowing and lending on Hedera in the future. And I guess from a startup perspective, there's DaVinci Graph, which is not one of the grant recipients, but it's within the ecosystem, and they make it very easy to create tokens in less than 3 minutes. And then there's Headstarter, the HST token, which is a dApp and token launchpad platform. And from a grant and investment perspective, really what we've been trying to do is lay the groundwork for a robust, user-friendly DeFi ecosystem on Hedera. As a layer one, a non-purpose protocol, there are tons of projects, right? And I can highlight a few more that are foundational and others that help startups grow or projects build, as well as ones that I just personally find really exciting and entertaining from a token and NFT angle. One of those is Karate Combat. So here's an extremely engaging and exciting platform. Karate Combat is the first professional sporting league DAO, and it allows fans to participate in the sporting league through the Karate token, and it's up-only gaming app. It's a way to bet on the outcome of fights in martial arts, and you can think of Karate Combat, as a competitor to, let's say, a UFC. From a gaming perspective, the ecosystem really becoming a hotbed of innovation, and I'm really excited about it. The high-profile partnerships like Doctor Who Worlds Apart, which is a JV with the BBC, and an upcoming mobile game from the community-driven Earthlings. I think there's a couple other notable projects, Lethos, led by the former Sony executives, and Not a Slime World, which is the most uploaded Web3 game in Vietnam today. A few others, there's commercial app like Tune FM with their Jam token, which is tokenizing streaming music, and Galaxy with their CLXY token, which is a social platform for creators, user experience similar to X via a web app. So it's clear that these projects were just at the beginning. As more developers and users discover the power of Hedera for DeFi, I expect to see even more groundbreaking projects and TVL. So it's really quite an exciting moment.
Very exciting, and the breadth, I have to say, is quite impressive. The breadth of the projects that are being developed. So speaking of TVL and growth, the TVL in Hedera is up 122% year to date, with SaucerSwap accounting for 98% of that TVL. So Joseph, we're glad to have you here. So can you introduce SaucerSwap and how it's contributed to that incredible growth?
Yeah, hi everyone. So first I'd like to thank the foundation for the invitation, the TIE for hosting this Q2 webinar, and everyone for tuning in. So getting right into it, SaucerSwap is a decentralized exchange built on the Hedera network, and it allows anyone to swap between HTS tokens. This is just the token standard on Hedera, so it's analogous to ERC20 on Ethereum. And they can also earn a portion of swap fees through liquidity provision. So interaction with the DEX is permissionless and non-custodial, and simply requires the user to connect their wallet to the SaucerSwap D app. And similar to DEXs on other chains, so Uniswap on Ethereum and Trader Joe on Avalanche, SaucerSwap operates through a system of smart contracts that implement what's called an automated market maker protocol. So this just means that it relies on a mathematical formula to price assets instead of using a traditional order book model. And it consists of two protocols currently that run in parallel, so V1 and V2. The first is a constant product AMM, and the second is a concentrated liquidity AMM. So V1 is a fork of Uniswap V2, and it launched back in August of 2022. With the help of HBAR Foundation liquidity mining grant, it quickly grew to attract $15 million in TVL and generate $500,000 in daily trading volume. So this was fine at the time. However, our team were cognizant of the rapidly evolving DeFi landscape, so focused our development efforts on forking Uniswap V3 to enable concentrated liquidity on Hedera. And this ultimately became SaucerSwap version 2. So this launched in mid-November of 2023 and marked the beginning of Hedera's substantial increase in on-chain DeFi metrics. As you mentioned, TVL is up over 100% year to date, currently sitting at around $106 million. And volume is also up over 10x from before the launch of version 2. So it actually set a new record yesterday of $43 million in daily trading volume. And that's amid the recent price volatility. So this rise in metrics can be attributed to the heightened capital efficiency of V2, along with changes to SaucerSwap's tokenomics to better align incentives. So addressing the first point, V2 offers higher capital efficiency by allowing liquidity providers to allocate funds within specific price ranges, concentrating their capital to optimize trading fees and reduce slippage in those ranges. And this is in contrast to V1, where liquidity is uniformly distributed across all possible price points, regardless of the token pair. So if you take stablecoin pairs as an example, in V1, much of the liquidity between tokens like USDC and DAI is often underutilized due to the broad price range over which liquidity is distributed. With a V2, a liquidity provider will typically concentrate their funds within a tight range around the $1 peg for this asset pair. So this results in substantially greater market depth in that region where most trades occur. And V2 is therefore able to support a higher trading volume per unit of TVL compared to V1. So if we look at yesterday's data, for example, the volume to TVL ratio of V2 was 2, whereas V1 was a mere 0.33. So a higher trading volume translates into more fees for liquidity providers, and this creates a sort of flywheel effect, which can help explain the recent growth of DeFi. And I won't get too much into the details of the second point, but the tokenomics of SaucerSwap's protocol token SAUS were adapted upon the release of V2, and this included lower overall token emissions. You can think of that as an extended release schedule, and a reallocation of tokens entering circulations to what's called the Liquidity Aligned Reward Initiative, abbreviated LARI. This is an incentive model for V2 that rewards users based on the effectiveness of their liquidity provision. So these changes resulted in increased participation in SAUS staking and farming, and it also proved to be an effective bootstrapping mechanism for V2, which is currently ranked in the top 10 by TVL among Uniswap V3 forks. So yeah, well, there's many factors that are contributing to the growth of Hedera DeFi. I believe SaucerSwap V2 was a major catalyst this year.
Awesome. And the reason why you chose to build SaucerSwap on Hedera, what aspect of Hedera won you over other chains, for example?
Yeah, good question. So myself and the other co-founders of SaucerSwap were actually members of the Hedera community since the beginning of last cycle. We actually met each other in a Hedera community Discord server called Club HBAR. So we were initially drawn to the network because of its distinct advantages, such as the high throughput, low predictable fees, ABFT security, and of course the enterprise-led governing council. We believe these features position Hedera as one of the only networks capable of scaling to support enterprise use cases. And we are beginning to see such cases come online, such as Avery Denison's Atma.io, which currently handles over 1,000 transactions per second using the consensus service. So as time progressed, we began to see a demand for more retail-focused applications, as retail was historically underserved. NFTs were just beginning to emerge, and DeFi was virtually non-existent on Hedera. So a Hedera native DEX seemed like a good idea, as Hedera was in the process of upgrading the network to allow for smart contracts to interact with the native token service. So we recognize key advantages a Hedera native DEX would have over its cross-chain competitors. Low fixed fees in USD means that it avoids the cost-prohibitive gas fees that occur on other chains when demand for block space rises. So the network fee to swap will always cost around 5 cents, whereas it can cost hundreds of dollars on Ethereum, as we saw in the last bull market. There's also no concept of maximal extractable value, or MEV, as the hash graph guarantees fair ordering of transactions and thus negates front-running risks. So this is also a major issue on other chains and has cost unassuming users millions of dollars in losses. So yeah, these are just several reasons why we decided to build a DEX on Hedera. And we're excited to be this deeply involved in the growth of the ecosystem.
Awesome. And at the core, right, the consensus mechanism and the consensus service that you mentioned, and according to the HBAR year in review report, the Hedera consensus service, HCS, accounted for 99.7% of network transactions in Q3 2023. Greg, can you explain what HCS is and how it can be leveraged by DeFi projects on Hedera to encourage more institutional use cases?
Absolutely. And I'll expand a little bit on some of the points that Joseph just made. But what these really are, these are commercial transactions. They're largely related to time-stamped auditable processes, such as supply chains, as an example. You can think of the consensus service as a tool that helps people at low cost make sure that everyone agrees on the order of messages and the time they were sent without needing that central authority to control everything. And what this does is it ensures fair ordering for timestamping, high throughput and fast finality, while allowing for encrypted messages and the seamless interoperability with other chains or private chains like Hyperledger and Corda, making it ideal for enterprise applications, as an example, or consortiums that may require immutability and privacy. For financial apps or dApps built on Hedera, the consensus service really can be used in several ways. And it makes it great for big institutions as well as small institutions to really feel comfortable. And I would say, first off, that it's about being able to create reliable and transparent data feeds for things like prices and rates. Secondly, it can help trading platforms match buyers and sellers fairly without the need for the central order book. And it can make auctions more secure and transparent. And then there's the regulation side, of course. This can help allow regulators to have a tamper-proof record of transactions. And so, for DeFi, as Joseph mentioned, I think a fair order book that is timestamped and removes the ability for front running or bribing miners or consensus validators is critical. This addresses the manipulation of transactions within a block that can occur when others are able to offer a higher gas fee to move ahead in the line. And that functionality just is not possible with Hedera. And I think it makes a more fair and scalable marketplace.
Interesting. And so back to you, Joseph, on SaucerSwap and the V2. So you mentioned all the improvements that came with V2. One feature that was introduced for V2 pool is auto pools. How has that feature improved user experience and liquidity management on your platform?
Yeah, so auto pools are the latest major addition to SaucerSwap, and they're based on the ICI Active Liquidity Management or ALM protocol. So they enable users to deposit a single asset into a vault, which sits atop a SaucerSwap version 2 pool. An algorithm will then take this user deposit and allocate it across a range of prices within that pool, and periodically rebalance the funds to continue earning fees at the current price of the pool as it changes. So Uniswap version 3 showed us that managing concentrated liquidity positions is notoriously difficult and time-consuming. Auto pools have undoubtedly improve the UX of SaucerSwap by allowing users to participate in V2 without the continuous effort of manually rebalancing their positions. There are drawbacks, of course. So auto pools may not capitalize on fees and rewards to the same extent as a diligent liquidity provider. But even so, they enable any user to maintain exposure to and earn the majority of their fees in their chosen deposit token, while also benefiting from its potential price appreciation. And it also follows that the risk of impermanent loss is reduced. So attempting to execute a similar strategy consistently over any length of time would either require programming skills or frequent market monitoring. So in short, auto pools make concentrated liquidity provision accessible to all users and significantly improve SaucerSwap's UX.
So automating everything and making it a lot easier for people to provide liquidity, right? So I mean, these days everybody is throwing AI at everything. So have you thought about using AI to automate DeFi trading liquidity provision, are exploring such things to be integrated in your platform?
Yeah, no, it's definitely something we've discussed. I definitely see potential for AI applications in DeFi. So as you mentioned, automating trading and liquidity provision strategies. There's also use cases in security. And then some more exotic like yield strategies, for example. So we're already seeing some use cases. I believe that Urine Finance is using AI to optimize yield farming rewards. And there's actually an application of AI on Hedera, Serial Finance, which is a lending protocol that's expected to launch soon. And I believe they're using AI to reduce the risk of liquidation through predictive modeling. In terms of SaucerSwap, so we have discussed leveraging AI in Sauce Pro, which is a planned subscription-based service designed to provide advanced features such as real-time notifications, personalized insights, and more. So for instance, we could use AI to analyze user behavior, past transactions, and market data to offer personalized trading recommendations and risk assessments. I should note, however, this is entirely speculative. So the exact application of AI in Sauce Pro and beyond is still being determined.
Yeah, and I can totally imagine too that I can see the risk management aspect and looking at salient things in a proactive way. Maybe the trading part is a bit more difficult to exactly put in place rigorously. So very interesting. So in terms of growth, you guys at SaucerSwap have hinted plans to expand beyond just being a DEX, right? And offering a more comprehensive DeFi suite of products. What are the DeFi primitives or products are on the roadmap so far?
Yeah, so we're currently prioritizing the development of a voting system. This will enable on-chain governance through the Hedera consensus service. And specifically, the SaucerSwap DAO will allow community members holding Sauce tokens to influence and guide the protocol's development through token-weighted voting on proposals. And these proposals will range from matters like creating V2 pools to allocation of token incentives in V1 and V2. Beyond governance, we aim to expand the offerings of our D app. So as mentioned, this includes Sauce Pro, as well as the introduction of limit order functionality, fiat on-ramp and bridge integrations directly in our web app, and more comprehensive analytics. We also plan to launch community pools, which is still in the concepting phase, but it's essentially a novel bootstrapping mechanism for projects in the ecosystem and an opportunity for ex-Sauce holders to participate. So our roadmap isn't linear, and we have adjusted our priorities in the past based on observed market trends. SaucerSwap version 2, for example, was moved up in the chain of priorities. But in any case, we're very excited about the future of SaucerSwap, given how far it came in just over 1.5 years.
Awesome. And so there's the expanding the suite of products, but then there's also, in terms of interoperability, how do you then bridge out to other ecosystems? So you have emphasized, right, the importance of enabling interoperability between Hedera and other chains. Do you have any particular chains with high priority for integration? What is the status of those cross-chain bridges and projects?
Yeah, so we don't have any current, we currently don't have any plans of deploying our protocol on other chains. But what we are interested in is making it easier to move assets between chains. So Hedera has historically been very siloed. So I view interoperability with other chains as a top priority for attracting users and developers and growing liquidity. Hedera's push to gain EVM equivalency has put us on the right trajectory. And we are seeing more developers as a result of improved EVM tooling, the recent addition of oracles, Supra and Pyth, along with new cross-chain users onboarding thanks to the MetaMask support. So stablecoin liquidity remains a bottleneck, and demand will likely be further constrained as lending protocols launch on the network. I believe there's 3 at the moment that are currently in development. I therefore view, I think, a wider selection of bridges and interoperability protocols, think like layer 0, is a vital next step. So I see the most value in establishing bridges between Hedera and other layer 1s with large DeFi ecosystems, such as Ethereum, Avalanche, BSC, and potentially Solana. And then providing the necessary incentives to attract users of these chains to Hedera. So this could be like a faucet upon bridging, or liquidity mining campaigns and pools containing the cross-chain assets of interest. And yeah, I think it's just important to ensure the onboarding experience is as seamless as possible. This is the most challenging part, as the UX of Hedera speaks for itself once the user has become established with a funded account. Regarding the state of bridge integrations, this is probably more a question for the foundation, but I am aware that progress is being made, and we should see new additions to the network shortly. So I'm really looking forward to that.
Yeah, and you mentioned stablecoins as well, right? They're cornerstone for DeFi, and stablecoins like USDC, for example, play a critical role. On Hedera, year to date, USDC has seen 35% increase in circulation. So over to you, Greg. How does stablecoin integration benefit the Hedera ecosystem, and how are you thinking about the integrations at the foundation?
I would say first and foremost, stablecoins like USDC native on Hedera, they provide a reliable, low volatility asset that can be used as a base pair for trading. It can be used for lending and for other DeFi activities. So it's vital that stablecoins exist. Circles USDC, as mentioned, is native on Hedera. Circle is, of course, one of the leading regulated stablecoins in the market. And I think that speaks well to the variety of applications, both in the DeFi and institutional arenas. Firms like Transact, banks, MoonPay, they all support fiat on-ramps for both USDC on Hedera as well as HBAR. And so the network's low transaction fees and high speed, I think they really make it ideal for stablecoin use cases like remittance, micropayments, cash flow use cases, metered money, continuously flowing cash flows. That's something I personally am really excited about down the road, because it's a deviation from the current world where we're paid on a biweekly basis and receive monthly dividends and things of that nature. So when these transactions cost a fraction of a cent, and the throughput is there, as it is with Hedera, new things become commercially possible. And that to me is quite exciting. The Hedera ecosystem also launched the Stablecoin Studio, which is a open source toolkit for financial institutions to easily issue stable value assets. So other stable coins, other fiat denominations, stables based off of commodities and things of that nature. Shinhong Bank used the Stablecoin Studio for their recent stablecoin issuance and on-chain foreign exchange swap, which I believe occurred in Taiwan.
Yeah. And so those big institutions obviously need when they start looking into building financial primitives on chain, they need these kinds of stable coins. And you already gave us an overview of all the different primitives that are being built as part of the DeFi ecosystem on Hedera. So let's talk a bit more specifically about more quote unquote institutional DeFi. What is the vision for that? Can you elaborate on key strategies driving the development and adoption of DeFi solutions, specifically targeted to institutions on Hedera?
Sure. Yeah, I think the vision for the industry as a whole, but certainly for institutional DeFi on Hedera, is to create a secure, compliant, efficient ecosystem that enables the world of financial instruments and assets broadly to be integrated in a seamless fashion to the world of decentralized finance, right? Today, I think that DeFi is viewed by institutions as a battleground arena, right? A proof of concept of what is possible. I mean, certainly there's tremendous amount of engagement within our ecosystems, but showing that a smart contract can facilitate these trades in a secure, safe, and compliant way opens the door to the world of other assets. So, and I think at its core, this vision for Hedera is focused really around the retail and enterprise applications, but from an enterprise grade, it's features and compliance combined, right? It's the built-in KYC and AML functionality on the token level. It's customizable token controls and the ability to maintain privacy while ensuring that immutable auditability. And so that those features open the door to securities and other financial assets. And Hedera really provides a unique platform for institutions to engage with DeFi in a way that meets those regulatory and risk management needs. I think if you look at the recent meme coin craze as an example, it's indicative of future load, the amount of throughput that a network can handle, right? And that's critical for institutional volumes. That's critical for the scale of institutions and other financial markets. And so when you see networks like Hedera that have the highest transaction throughput, have the highest transaction count and uptime, then it leads to the ability, the foundational blocks for new assets to come and start to engage in DeFi.
Indeed. Thanks a lot for that, Greg. And so back to you, Joseph. So looking ahead, what are the key developments on SaucerSwap roadmap that you're most excited about?
Yeah, so that's a tough question, but I think I'm most excited about on-chain governance, as this is a key step towards further decentralizing protocol activities. Our current voting system is NFT gated and takes place on Discord, which has served as a functional but less than ideal stopgap solution. So the foundational work of our on-chain token-weighted voting system has been completed, and we're currently in the process of UI UX design and implementation. So that includes like a front end to cast votes, as well as a forum to host discussions surrounding proposals and other topics. And beyond this, I'm excited about several obvious quality of life improvements, such as the convenience of fiat on-ramps and bridges integrated directly into the SaucerSwap D app. Looking further out, I see great potential for Sauce Pro to elevate our UX to the next level, rivaling that of centralized exchanges, which is the ultimate goal. Beyond our internal roadmap, and this is arguably more important, I'm excited to see what other developers build on top of the SaucerSwap protocol. So Ichi's Active Liquidity Manager, which I talked about, we chose to integrate directly into our web app as auto pools, but that's just one of the first examples. Other ALMs have expressed their intent to integrate with our contracts, and we are seeing a wider range of projects approach us with questions. So ultimately, the goal for SaucerSwap is to become an open ecosystem with many DeFi apps, integrations, and tools built on top of the core contracts. So yeah, that's what I'm most looking forward to. But yeah, once again, like to thank everyone for joining, and thanks to the TIE for putting on this Q2 webinar.
Thanks a lot for sharing your insights and where you guys are at and where you're looking ahead. So final question for Gregg. And we've seen the DeFi landscape has evolved and grown very rapidly with lots of new trends like real world assets, tokenization, hybrid DeFi, CeFi models that have been gaining a lot of traction. Which DeFi innovations or emerging use cases is the HBAR Foundation most excited about? And how do you see them taking shape on Hedera?
I mean, it's a really tough question because there's so much that we're excited about is the reality. There's so many different applications. And I think when you look at them to combine, it's about where are their efficiencies, where are their cost reductions, where are their new revenue opportunities, and that's really exciting. And so, for me, with the financial background, tokenization of real world assets certainly by financial institutions is exciting. Once assets live digitally, then they can interact seamlessly with DeFi, and you start to talk about enabling collateralization of tokenized assets, which can take an asset and make it more productive. So injecting liquidity in a variety of different new assets, really. So from a real world asset perspective, I think yield bearing instruments seem to be leading the charge because it provides a way for future cash flows. And it's certainly a need for many ecosystem participants. And so I think you see that from the likes of Archax, the London-based exchange broker and custody platform that has now tokenized several money market funds, including money market funds from both the UK and US's largest asset managers. And this provides the ecosystem participants with that greater yield, that optionality, without having to move out on the technology risk curve, which was really what was presented previously in when participants were needing to search for yield. Personally, I'm also very excited about carbon sustainability finance. That as a space is enormous. It's a new market, and one that's globally important. It happens to be fraught with skepticism due to fraudulent claims about net zero participations and the double counting of emissions. And so we're seeing a tremendous amount of traction here on Hedera for tracking the carbon market. So I expect to see some continued development in that arena for sure. But in total, I think there really is a lot to look forward to, and I'm really excited about future discussions with you all.
Thank you so much for sharing that perspective, and I think that wraps up our Q2 2024 State of the Ecosystem on Hedera. So thanks a lot, guys, for joining. Thanks everybody who joined online and listened, and see you next time.
Thank you.